Let's take a look at some information and charts on Litecoin for BraveNewCoin. Litecoin is a proof of work coin that is forked from BTC, has a 4x total coin supply with block times 4 times quicker than BTC. It's merge mined with Doge on the script consensus algorithm, an initiative put forth by Charlie Lee, the creator of Litecoin, many years ago when Doge was at risk of disappearing due to poor security. So had he not put that forward, Doge would not be here today. Hash rate difficulty for Litecoin has basically held flat over the past couple years. They had their halving in August 2019. Hash rate fell after that, but ever since it's been up and down, back and forth, probably slightly related to mining revenues in Doge most recently, and heavily related to prices of LTC. This is ASIC profitability at 4 cents per kilowatt hour, which is what most industrial miners get, if not better. There are 2 new ASICs coming here, which is probably why we see a rebound in hash rate there after the China stuff. It's hard to know how much of what kind of hash rate was in China. Definitely a lot of SHA-256 for BTC, but my guess is a lot of script as well based on the graph. All of these are still in profit at 4 cents per kilowatt hour. I don't know if this profitability calculation includes Doge and LTC or is just Doge. I have no idea, but they're still profitable. You mine both anyway, so there's no reason not to do it. There's no reason not to collect both of those rewards. And if we look at the miner rewards for both Doge and LTC, Doge is 3.3 million per day, LTC 1.3 million per day. That flippened in April this year when Doge surpassed LTC's mining revenue for the first time. This doesn't even, I don't think this includes transactional revenue. I could be wrong. I don't know what the calculation for coin metrics is here exactly, but I'm assuming this is just block reward. So if anything, Doge is keeping LTC secure at this point, which is kind of funny. There are 1,300 nodes, mostly in US, Germany, and France. Most of the nodes are upgraded to the latest or newer versions, which is good. You want to see decentralized everything geographically. You want to see nodes up to date so that they're not at risk of some sort of attack. So everything looks good as far as that's concerned. I'm going to talk about on-chain stats now, and I can't talk about on-chain stats without explaining what the heck this thing is. Lightbringer came about in, September 2020. I mean, you can see it on the chart, right? In September 2020, they announced to release this thing, some sort of RPG game on-chain. Cool, great, awesome. But you got to know that if you're looking at these stats, because otherwise you're thinking, wow, Litecoin is more bullish than it's ever been based on on-chain stats. When that may be the case, but it's different than it ever was because it has this new thing on the chain. So there was some sort of airdrop, I think, initially. And since then, it's gained traction and or people have continued to use it. And transaction counts basically hovered very near all-time highs. Average transaction values stayed low, which makes sense because if there's a lot of microtransactions going on, that's going to push average transaction values lower. So activity's definitely picked up on chain, and unconfirmed transaction counts have picked up slightly, not by much. I mean, if we look at the total fees pending, it's nothing. This is 0.1 LTC up here, so relatively little. But the total counts are high because these are like no fee transactions essentially. And if we zoom way out, we can hopefully see where, so in September, this is January 2019, October, July 2020, October 2020. You can see where the transaction counts for pending transactions picked up big time after September, October, once that game hit Litecoin, or the game is being utilized by the chain. SegWit's also on Litecoin, one of the first to do so, and it's currently around 80%, 81%, which is good. It says it was a useful and real protocol upgrade that benefited consumers, users of the chain, and it only makes sense to put it there. One of the issues that we will eventually run into with proof of work, if transaction counts aren't stable or if fees are super low as the block reward disappears, we won't have a security budget for the chain, or it'll be super low, questionably low, potentially too low. These aren't things to really consider I mean, the things to always consider, but they don't become important until we get closer to that date. I think it's either 2160 or 2064. It's a ways away, but it's good to start thinking about those things now. LTC does have the Lightning Network, but based on network capacity, no one's really using it. There's 140 LTC there. So, that's kind of all there is to say about that. They also have Mimblewimble extension blocks coming, which is a type of sidechain element, privacy element. They say the code is complete. I'm glad that they're testing this out on Litecoin and not BTC. I'm not a big fan of it because it basically creates a black box in the sidechain where it's what happens in the black box kind of stays in the black box. Then it's remerged with the main chain. So if the consensus rules break in between there, it may be hard to determine, where that happens. Hidden inflation bugs come to mind initially. So hopefully they explain ways that they can prevent or mitigate those issues. But that was completed March 16th. I haven't seen too much more about it, so I'm sure they're just auditing, testing it, that sort of thing. NVT has continued to fall in the line here since April 2020, February 2020. When NVT is falling, that says on-chain activity is rising faster than market cap. NVT was at a multi-year low in July, but it's rising again. Active addresses at all-time highs. Again, it's not bearish for anything, but the chain is fundamentally different now that it has this gaming component. Ideally, it brings more people to LTC. If you're an LTC person, community member, these are the exact type of things you want to see. People using the chain, reasons to use the chain, right? So this is definitely bullish. It's just, is it going to move the needle for LTC price? I don't know. A metric similar to NVT is MVRV in the fill here. It's measure market cap versus on-chain activity directly. And for most coins, a 2x multiple, meaning 2 times the market cap greater than on-chain activity, has been a relative top for generally everything. LTC has hit 2+ several times here. Most recently it hit 2.12 at basically the top. And the lows here are kind of sub 0.5. If this gets to 0.5, that is a massive buy historically. And above 2 is a massive sell. So currently it's at 1.27. So it's got some upside. This will change obviously if market cap goes up quickly versus on-chain activity, if on-chain activity goes up quickly versus market cap. So just because we're close to 2 doesn't mean the price can't move up substantially from here, right? If on-chain activity keeps pace with market cap, then this will stay flat. And that's ideally what you see in a bull run. Increases in on-chain activity, increases in price. LTC also has a Grayscale ETF, not ETF, pink sheet, LTCN, currently at a basically parity with spot. All these are, for the most part, now likely to hold negative until some sort of BTC ETF gets approved, if ever. Grayscale probably is included in that, and these get converted one at a time to ETFs, probably. Litecoin Google Trends worldwide over the past 5 years, basically flat, rose a little bit over the past year, but essentially all that has died off. And if you want to zoom in a little bit, I mean, it is rising, right? So it's not exactly turbo bear, but I'm not going to use this to influence my trading directly. It's like, yeah, okay. Like Litecoin Google Trends is rising, but I'm not going to go long on Litecoin because I'm seeing this, It's a good sign of things to come potentially, but I wouldn't hold my hat on it. Look, switching gears to technicals, this is the 1-year MA in the green, the 5x multiplier in the red. The white is the midline between the two. And historically, green is a buy, red is a sell. Most recently, we didn't even get to the red, the multiplier. We basically tapped the midline 5 or 6 times, which is a 2.5x. So currently it's approaching the buy zone at around 155. Anything below that says, based on this indicator, that's a good buy relative to the past 365 days of price action. Now, this doesn't mean it's going to instantly bounce. I mean, this thing could stay bearish for 8 months, could stay bearish for forever. You don't know, right? It just says on a relative basis, that's a good place to buy. And based on the most recent times it's attempted to hit the multiplier, 478-ish is probably the top target, and that's going to move up if this thing moves up, if price moves up. But if you're buying one below 155, the price target is probably going to be 478 to 500. It's probably not going to be the multiplier. It hasn't hit the multiplier since 2017. So until it does that again, you can't say, yeah, it's probably going to go to 800. I wouldn't believe that. The 5200 EMAs, VP, VR, yearly pivots, RSI, and volume here are a bit mixed. Everything has sold off pretty substantially over the past couple days. There's been threats of 5200 bear crosses everywhere as well. Not a ton of volume below current price, but there's a little bit at looks like 130 or 135. For all these charts, you don't want anything lower than the lows we saw in July, August. You don't want anything lower than that. That just means there's no bid support left. Nobody cares. Let it cliff dive back to 50, back to 60. So depending on your risk size and whatever else, you could always have bids 130 and then stop losses are at local lows. You know, that's pretty common place and trade setup. There's a yearly pivot at 100 and there's a yearly pivot at 175. All these levels on the way up will act as resistance. But in the near term, I would definitely be watching that 130, 135 level. Daily Cloud says this is about to flip bearish after an attempted edge-to-edge move, which to me is fine if you're bullish, because into October, November, mid-October, if this thing is above 185 mid-October, then that's qualifying as a bullish Kumo breakout. And it may be a tiny bullish run, and it may be a mega bull run. Like, I don't know, right? Doesn't matter. The point is, if it's bullish on trend, then it says, yeah, it's okay to be long here. Right now it's telling you it's not okay to be long here based on this. This is about to fall below the cloud. Probably chops around, probably is more bearish than bullish when it's below the cloud, like it was here. Again, this doesn't mean it's going to go to zero. It just means longs are not preferable based on trend. On the 12-hour, it's already below the cloud. Again, if you're bullish, you want to see this back above the cloud. So it's an easy trade if you are watching this into October, November, a month from now, because the moment this flips above the cloud again, it's go time. You know, you don't have to think about it. There's nothing else I need to see to say, yeah, this looks good. Even though this is a long-term buy potential on the 365 MA multiplier, based on trend, the cloud is telling you be careful. With longs, expect price to go lower. That's what it's telling you when it's below the cloud here. LTC BTC on the weekly, I would never trade this directly. I would never buy this directly. I would basically only touch this if it is a mega dump with RSI at like 10, you know. This thing has been bearish for years. It has head and shouldered multiple times in various different ways. Inverted cup and handle. There's so many bearish chart patterns here from 2017 to 2020 that until you see a series of bull patterns at the bottom here, you know, you could argue falling wedge, you could argue W of a bottom, you could argue bull div. It's still, I would not touch this at all. The mean reversion level is the 200 week moving average between 006 and 007. 0.1 is the level to watch as well in the remote future, should this thing pull up for any reason. Just looks, you know, it just looks turbo bear to me. It looks like it's ready for all-time lows. LTC ETH, I don't know if I've ever looked at this chart on the weekly, but also looks equally depressing and not remotely bullish. You know, you could argue that this thing wants to mean revert eventually to some level, but fundamentally, you're not going to hold LTC over ETH for any reason. Let's be real. If you are in crypto at all, you understand the differences between LTC and ETH, the fundamental use cases for LTC and ETH, what you can do with LTC and ETH. I wouldn't consider LTC store of value personally, so that argument for me is null and void. And technicals tell you, yeah, this thing is definitely not bullish. You know, there is a growing bullish divergence, lower lows in price, higher lows in RSI, but that's just not for me. Last, I'll just mention the ETHBTC fund and DeFi portfolio. I trade for Techme Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything including AUM, performance, allocation. You can see all of the yield plays here, comp, Aave, Yarn, as well as the trades in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.